The TradFi rally is taking a little bit of a breather today. Meanwhile, crypto, especially altcoins, are pumping hard. We're going to be discussing that, the latest economic data, news, and much more today on Money Never Sleeps. Thank you for joining us, everybody. As we get going today, hit that like button down below. Subscribe to our channel if you have not yet. Nothing Kevin or I say is financial advice, so please do your own research before making any sort of trades. Kevin, we see crypto on a nice little run today. We're hitting some resistance points. Link is having a hell of a day. Solana's down just a little bit. Some of the other alts like Matic are also ripping on this lovely Wednesday. What are you looking at in the markets? How are you feeling about everything right now?
I'm doing great, man. Hope you're doing well. Happy FTX anniversary, by the way, too. It's been 1 year since the absolute collapse, right? I think the 11th is a total collapse of the company, but feels
That
like
was like
November 8th.
bankruptcy day.
Yeah, November 8th was the day it was like, oh, Binance is going to buy them. And then they didn't. So there's that. But yeah, alts have been going crazy overnight, right? We talked about Link yesterday and we talked about Solana. Link that got invalidated. There's so much, I think, excitement around Link and Grayscale's trust, the Chainlink trust. I think that's driving a little bit of some of the FOMO here. I was telling you right before the show, Solana's price keeps going up. However, the total value locked seems to be being depleted. It's going down like crazy. So there's a lot of like conflicting things back and forth when it comes to a lot of these assets. I don't deny the fact that these alts are pumping like crazy. It's just kind of funny that they're pumping 1 year post FTX. It's almost like a middle finger to SBF in some ways, but at the same time, it might just be the same guys who caused FTX to collapse that are having some fun in these markets. But yeah, I mean, great gains for alts. Matic is at 80 cents right now. Who would have thought? But yeah, so looks like I'm going to be transferring some fiats into your account come December 5th.
We'll see. A lot can happen in a month. It's very, very boring out here in the stock markets. We look at the S&P, NASDAQ, Dow. They're all down between, 0.05% and 0.25% today. So they may be breaking their 7-day winning streaks. We'll see if that changes in the last hour of the trading day. A lot of uncertainty right now about what direction things are heading in. We had a big bond sale today on 10 years. The demand for that was lower than expected. There's going to be a 30-year bond sale coming up in the next week as well. I imagine also the demand for that will be a little bit lower than expected. And some people are like, oh, well, that just means that people are deploying capital into equities or other risk assets. But like we talked about yesterday, with a decrease in, money supply, liquidity, I don't think that's the case. I think people are just like have less money to put into things right now. So that was one thing that caught my attention. It all, what I saw as well stated that usually S&P, NASDAQ sees a hit of about, 0.5% to 1% during these bond sales. We're kind of seeing that today, not too bad. And I think that's reflected in the lack of demand. Also, so much anticipation about what Powell is going to say tomorrow, what other Fed speakers are saying this week. We noted on Monday that there's very little as far as economic data coming out. It's mainly members of the Fed speaking at different conferences, and we'll get more data next week. And so the markets are like, okay, we think that they're done raising rates. Are they going to give us any hint here? Powell hasn't, he's just being himself, right? Like he's going to say the same thing over and over again, that they're going to be data dependent, blah, blah, blah. So we haven't heard anything new there. It's leading to, like I said, a very boring day in TradFi. What else, though, outside of the SBF stuff, FTX, all that, do you think is worth discussing today? Because I'm not seeing a ton on my end. Like news-wise, it's pretty quiet out there. We haven't had any like major calamities, which when there's multiple wars going on and, like more bank issues happening and it's very quiet, I'm just like, something's wrong. This is a little too quiet.
This is the type of market that I really find super fascinating because it's just given me so much time this past week just to dive in the charts and see where the bullshit's lying. And there's a ton of it. in this market, and we're seeing some quiet news headlines that are coming out that I think implicate that something bigger is on the rise. Something that was happened yesterday that we didn't really talk about was there was some elections throughout the U.S. yesterday, right? I think you had some. Ohio had a few. I didn't go too deep into it, but we got those out of the way.
Hey, real
Now,
quick, congrats, Ohio. You got recreational weed now. Way to go. You love to see it.
all the crazy Ohio State kids have fun, boys. But yeah, this is really interesting because we haven't really paid attention to something like that, right? We're always thinking, oh, an election year's coming up next year. Well, we just finished. We kind of had an election year just right now. It's not at the same scale, but that's kind of important still. So that's one thing that's out of the way. Now we have a few other things here ahead of us next week that are really important. We have the November 17th, the budget resolution, whether we get that or not. Even if it comes down to the wire, like we said, that's going to impact the US's credit and how I think it was S&P that was looking to downgrade the US next if they didn't come to a consensus. I don't think the House of Representatives finding a speaker, that took that long is going to help either. It shows uncertainty in the markets, but we have OPEX, which is really important for a lot of these contracts and stuff like that. Just historical note, it was post OPEX back in, I think, 1987 and 1929, where the markets crashed the following day after the options expired. So that's just something, interesting to keep in mind, that there is volatility once those contracts do expire. And we are also seeing some really interesting stuff amongst the banks. I want to pull that up, and then we'll get into oil because that's kind of painting a really scary picture, I think, for the broader market. But let's pull up what the banks are doing right now. And it's kind of reminiscent of what's happening or what happened about 15 years ago. So they're offloading a risk, right? And what they're doing is pretty much getting involved in these things called synthetic risk transfer, which pretty much is the bank's way of offloading risk to private credit fund managers to the point where they can, operate without the, hitting the requirements for what regulators are making them do when it comes to capital requirements. So let me just read a little bit here. This is what JP Morgan.
Thanks, man. They always do. They never are up to anything that isn't above board. It's really wonderful.
Oh yeah, I mean, this is just a way of kind of like almost hiding some of their losses in a way. I think it's really interesting to see because this was in fact about 20 years ago. But post 2008 with credit default swaps and all that stuff, they kind of didn't take advantage of it. But in the past year, there's been, I think, $200 million or $200 billion worth of these synthetic risk transfers that have taken place. And in the past year, 160 billion of those have happened. So majority of them have happened this year. And with the capital requirements being risen, and regulators keep rising, how much they need to have on hand for loans and assets that the banks are holding. They're doing this even more so since March, back when SIVB collapsed, First Republic, Signature, all those. So it's gotten even stricter. So these banks are willing to take a pretty big, it's not as much as they would lose if, they had to keep up with the requirements, but it's a pretty good haircut. I think it's like 15% or something like that. It's the investors who are the private credit fund managers. They can pretty much get about 15% according to people familiar with these transactions. The banks didn't want to do this at all, but in the past month is where we're seeing a lot of these transactions take place. But here, just right here, regulators have been raising capital requirements for years. They propose even tougher measures after the banking panic that began in March, higher interest rates and eroding value of the bank's investment portfolios, which can also eat into regulatory capital levels. So when I was reading this seems very fishy to the point where these banks are doing. I don't think it's fraudulent. I just think that it shows that the banks are in a worse position than a lot of people are anticipating, and they're just trying to survive at this point, right? I think a lot of people don't realize this, but say a bank like Bank of America, that's a bank that has over $120 billion worth of losses, and they've only produced probably maybe 10 billion or so in the past year in terms of how much they've earned in revenue. So that's very concerning to the point where there's a huge disconnect between how much they have unrealized in losses and how much they're actually generating. I mean, I know it's not a bank, but Coinbase, they haven't been profitable in about 2 years, which is really interesting to see. So I think a lot of people are getting this confused when it comes to earnings versus actual quarter-over-quarter corporate profits and year-over-year corporate profits. It's these institutions are not in a good place, and the banks, I think the fact that JP Morgan's even doing this is kind of sketchy. Just shows you that they're even in a pretty bad position. But yeah, I would be very concerned with the banks right now. This seems very similar to what happened in 2008 with credit default swaps. There could be with
like the synthetic stuff there. Anytime there's something, if I hear synthetic, anything when it comes to finances. I'm like, oh, that's shady as hell. Let's stay away from that shit.
Yeah, I mean, let's put it this way. I was reading about it yesterday and I was like, okay, it's really interesting. And then it blew up this morning that all these institutions were doing this and how much that it's happened in the past month. Month of October was absolutely insane. Like I said, $160 billion worth of these transfers have taken place. And they're not paying premiums on it, they're paying interest for how long they're holding these investments with these private credit fund managers. So we're going to see how long they can sustain that, but it's supposed to be less of a loss for them as opposed to meeting the requirement for what regulators want them to hold for capital against their assets. So really interesting stuff there. Still think the banks are fucked in many ways more than that. Even SoFi, which recently their chief risk officer sold off a shit ton of shares. Like pretty much the majority of all his shares he sold off. So that's a good sign when we're starting to see these banks, especially banks that have exposure to student loans, that are trying to sell off a lot of their shares because they might think something bad is coming their way, especially when it's the risk management officer. That's kind of shady there too. So banks not in a good place in my opinion. Something we're going to keep an eye on. But I do think we should talk about oil because that's something that's been kind of scaring the market. Have you been keeping up with the price lately?
Yeah, definitely saw that it is been trending down in a big way. 75 a barrel for WTI. Brent is hanging on just over 80. So we're seeing a huge drop there.
So I don't know if you feel this way too, but I think two things in this situation. I think one, it's possible for a short-term squeeze. It's possible. I'm not saying it's likely. I'm not going to bet on this at all 100% because I think the bigger issue, which is point two I'm about to make, is probably the more likely scenario, and that's demand is drying up globally, right? It's really scary when we see that the Russians and the Saudis have both cut production, and we're also seeing issues in the Middle East, and the price of oil continues to drop. That doesn't necessarily make a lot of sense right now. So what that's telling me is that demand globally is starting to pretty much dry up, both in the U.S. and other parts of the world. I know that China's been hoarding natural gas and oil for a while. I don't necessarily know if that's a good trade at this point now that we're seeing how much this price is dropping. But I do think that this could be signifying that maybe some of the people who are in charge of OPEC, some of the Saudis, they're kind of front running how much this is going to cost and that demand's going down. So they're not necessarily producing nearly as much. I think that could be the reason why we're starting to see the price go down. And if the price goes down and they're not producing as much, that means that, there's going to be less supply, but it really depends on demand, right? They're only producing less of a supply because the demand is not as strong as they expect it to be, or it just isn't there at all. So we could see a point where this falls off a cliff. Now, if we look at 2008, we saw that oil rallied crazy in 2008, right into the absolute recession, right? It went all the way to the top of June 2008. It was trading at about $146 a barrel. And then by the bottom of the market, in June of 2000, no, February of 2009, it was trading about $34 a barrel. So we could say that's, March 2022, that could be our bull market top. And we could be in this position where we're moving to the downside. And I honestly am looking at the charts, and I think that there is an argument to say that this is an A, B, C correction wherever this bottoms. Really depends on where global demand rests, but we could be in a very, very scary place for oil, which also just shows that demand globally for not just oil, but how much crude oil is used for other things such as manufacturing starting to dry up, and how that's going to impact the broader both job market, manufacturing, and just economy in general.
Yeah, with the holidays coming up, I'm really interested to see what travel looks like. We know that from seeing airlines and them reporting earnings that it's beginning to wane a little bit. Like these higher price tickets, they're people are having to make some decisions when it comes to their travel plans. And I've seen the price like, hey, gas is going down, and I'm sure Biden is going to be victory lapping that soon, as far as where the price is there. But definitely something to keep an eye on because, like you said, with a war in the Middle East, a war in Russia and Ukraine, doesn't make sense that oil will be heading down this time of year. So if demand is drying up, that is obviously has wider reaching implications than that. So anything else on that front, and then we can kind of look at a few of the crypto charts, especially for some of the tokens that are really hitting hard today. Like we definitely need to look at Link again. It has broken out of that that 15, 16 month range and has gone on a nice little run here.
Yeah, definitely. I'll just add that, you made a great point about the airlines. The airlines are kind of, it's a double-edged sword for both of them, right? Because they operate as both, when it comes to travel, they're providing a service, but at the same time, they're also a banking institution. A lot of people forget about these airlines and their credit cards, right? So if people are maxing out a lot of these credit cards and they can't go on these trips, I mean, that's just like double whammy. There's airlines that might get, hit extremely hard. That's why I think back in 2008, we saw some of these airlines drop, 80 to 90%, like in those 6 months that led from that crash. So that's something to keep an eye on. And it's very scary, in my opinion. I think that demand is definitely drying up, and we could be a lot closer than most people think to something, finally breaking in this entire global market. And I think it's the global market that's going to break. It's not just the US, it's not just Eurozone at this point. It's too big. It's beyond just us at this point. But yeah, let's pull up crypto right now, because that's, I think, where there's most of the action is happening. Which one do you want to start with first? Do you want to start with Chainlink, Matic, the Ponzi that's Tether?
I mean, we've talked about Tether so much. Why don't we look at Bitcoin real quick, because that is the granddaddy of them all.
Doing pretty good today.
Yeah, it's having a solid day. ETH keeps hitting that 1900 level, and it just cannot sustain above it for very long. So that's kind of where we're seeing the same kind of setup. If you're looking at like the daily chart, it can't decide if it wants to go to start moving toward oversold or stay overbought. Like, it's been doing this kind of weird back and forth. There's this tug of war happening, and the longer this tug of war goes down, my expectation would be the more violent the next move, whether it's to the upside or the downside.
Yeah, man, I think that's a great point. I agree with you in that regard, because this is a really strange place for Bitcoin. Obviously, we broke out of this triangle here. This is putting in higher highs and higher lows. You'd anticipate, I mean, we haven't put in a higher high compared to where we were on the 2nd of November, but I think we are oversold enough on the daily that we could see a push up just into this zone here. Doesn't have to, but I think that that's kind of the direction we're going with how much, we're seeing this trends to the upside. But and again, we're pretty oversold on the daily. So this thing's been going back and forth really fast. It's also kind of scary when you see that, because that shows you that there's not necessarily a ton of demand both in either direction. So if we start seeing the stochastic RSI go from overbought to oversold on the daily fairly fast, that's usually a sign of artificial price manipulation. That just means that they're going back and forth. The market's ping-ponging. That's all it is. So when I'm seeing this here, yeah, I think that this is a structure that's eventually going to break down, right? And we got tons of gaps to the downside. We got this massive gap from 32,795. I mean, arguably down to $30,000. We could say that because it just pushed up super fast. Didn't find any support on the daily. Maybe it comes down a little bit slower and it tests some of these levels of support here, like 31.7. That's something we have to keep an eye on, but that would also fill this small little gap we got here if we look at like the hourly charts. So that's something to keep an eye on for Bitcoin. But yeah, I mean, I think this one I think it wants to go to 36 and above, but it's just finding so much resistance and it's just not finding any demand, right? I was looking at CoinGlass last night in the order book. Order books are barren. I don't necessarily see the demand coming in for people buying. I think that we're seeing a lot of, we talk about all the time, Tether going onto these exchanges, these stable coins. They're still the top traded pairs for these assets, right? I mean, let me pull up Coin Market Cap real quick. I'm just going to pull up Bitcoin's pair. I guarantee you it's BTC FDUSD is this top traded pair right now. Yep, look at that. It's the number one. Let me share that screen real quick. It's funny how you can kind of just expect this to be the norm, right? Coin Market Cap, which is also owned by Binance. There it is. FDUSD, BTC. That's the top traded pair. I'm really interested. I don't know if I can see this BTC USD pair, USDT pair for Bitcoin. This is probably, no, I can't see it. It gives me some stupid thing. But what I was expecting is it to come to, if you can tell if it's USDT on the Tron network or if it's on the Ethereum network. Two very different transactions, in my opinion. If I'm assuming it's on the Tron network, considering FDUSD is the top traded pair for Bitcoin right now, and the price is pushing up. Retail's not using either of those. Retail's using USD, right? Or maybe some USDC or maybe regular USDT on Ethereum. So that's just something to keep an eye on. I don't necessarily buy that the price is organic and people are necessarily buying here, or even if there is distribution, I can't tell if that's the case. I don't think that is. But yeah, we're seeing this price. It should push up. We have to see if it, if they find any more money or if they have any legs where retail finally FOMOs in and pushes up. But I'm just not seeing it right now. Let's look at arguably the scariest coin right now, and I think it's Matic because look at this on the daily, guys.
Oh,
Oh man, Matic, making me lose money, brother. But yeah, I mean, I'm not too upset about Matic shooting up here because I do think that this is very on par with what we're seeing in the markets in general, right? We're seeing massive pumps that are fast in nature, and I think a lot of people are getting euphoric off these moves. Like if you got this move today, you're up 8%. Like good for you. I have no problem with people making money in this market, but how long is this going to last? And if it does last, how deep is it going to go following this, right? Are we going to push into a bull market here, or are we going to push into an absolute crypto depression? I think it's one or the other, right? It's either one at this point. But if I look in the daily, you can see that the volumes are extremely low, and this is on KuCoin. So I mean, maybe the volumes are a little bit lower than other exchanges. Pull Matic on. Let's do USDT because that's probably going to get the most volume on Binance. Yeah, we can see the volumes are very similar, and we broke out of this descending triangle. Anticipated this to hold. I mean, I could be an asshole and just say this, right? I'm not going to do that though. I mean, I could say we're still in a triangle and it's got to play out a lot longer. I think that this was the triangle and we broke out of it. How long are we going to be able to sustain this? It's going to be really interesting because we look on the stochastic RSI, you can see that we're overbought. We're at 199 on the daily. If we look at the weekly, we're 183. I mean, it's extremely overbought. We're fine. I mean, we broke through the 50 moving average on the weekly. If we look at the monthly, we still got plenty of room to the upside, right? But the question is, why is the price moving up while the volumes are still remaining extremely low? It's stuff like that that just make no sense to me whatsoever, and make me very cautious for anyone getting into this market. I'm not buying into this market right now because I think that this is extremely overvalued, and there's a lot of technicals that are going against it. But I do not underestimate the fact that price can still push up in an overbought market. We're seeing it right now.
You gotta look at it's like I was just kind of looking at some of the numbers. Link is up 100% in the last 20 days. I mean,
yeah,
good Lord, what a fucking run.
Dude, I was talking about this level right here, 13,381. I said if it breaks this, then this 5-wave move to the downside is absolutely invalidated. It's invalidated, guys. None I can't argue that anymore, right? It's well above it. I mean, shit, it went to height of 1478 today. Pretty amazing runs there. But you can see that a lot of volume did pick up here in October.
Yeah, like you see how long it was just trading in that fucking range forever, man. Like that was when did I start? I started DCAing in like December of 22, I think. Maybe a little before that. But yeah, I was just DCAing. That was one of my better things. Like I'm just not gonna try to worry about like buying, at a certain time. I'm just gonna I think Link's a solid one for the next bull market, and so far that is going well. So I'm happy with that decision.
Oh, we're in a bull market, are we? No, I'm just kidding. It's a great project. I agree with you that it's a very I think it's gonna be one of the best performing assets. I genuinely believe that.
When we hit a bull market, I didn't say we are in one right now.
I know, I'm just messing with you, brother.
Don't twist my words, Kevin.
And I'll let the other influencers do that for me. But yeah, it's this is where we are right now. I think that a lot of the Grayscale Chainlink Trust is driving a lot of this momentum here for people who are excited. And I mean, the volumes are pretty decent. I think on the daily, we can see that it picked up a lot back in October. The volumes are dropping off. So we are getting a bit of bearish divergence. We're well above the 50 moving average and the 200 moving average. We're above this level of key resistance that is now support. Where are we going to go to next? I think that's the main question. I mean, we could look at anywhere between 1492 to 1538 as the next level targets if we're going to continue this move. I think eventually it's got to pull back at some point. And again, I think that maybe
it's so overbought on every time frame. I mean, on the monthly, on the weekly, it's getting there. It's going to be there probably the close of today on the daily chart as well. So, and we know they can stay there for a while, but for it to pump past, into the mid 15s up into the 16s, there's probably going to have to be a little bit of it's going to need to take a breath here before it can go again.
It's got to find resistance at some point, though. That's the key thing, right? I think that I think this move is pretty
Or
much
not,
done.
or it goes straight to 1,000, and then I can just sell all of it and be done.
Yeah, that'd be a nice bag you have then. It's I mean, I was expecting Link, the next bull market, at least $100 a coin, between 100 and 200, I think was a good range, which I still think is very possible. But I do know that sometimes in these markets, especially when things are doomed, you do see these massive rallies that destroy expectations and capitulate a lot of people. So I even hear it in my voice right now as I'm talking. I'm like, well, I recognize this is a good pump, and it broke, it invalidated a structure. I'm looking for where resistance lies. That'd be price targets. I'm not saying take profit at these levels because maybe it can go up higher, but these are levels that you want to keep an eye on. I think that's around $15 at 14.98 to maybe 15, I think. Is that 15.38? I think that's a good range for us. That's conservative for us to see. Eventually it's got to find resistance at one of these levels. I don't know if it's if it's going to hold. I mean, we could break through it, like you said, but just keep an eye on this. I agree with you. It's completely overbought on majority of these time frames. It's had a great day today. That Matic today have been absolutely killing it. I mean, 11.62%. Then on the Matic side, you're up, about 7, almost 8% on that one. So we're in a very, very weird place in this market. And while we're seeing these things pump, there are things that are still giving me extremely conflicting signals. And I do want to pull them up real quick. And unfortunately, it's going to be the boring stuff that no one likes to talk about, but stablecoins. We're down $85 million again on Circle. What is going on, guys? Like, in a bull market, you would think that USDC would be doing extremely well, right? Especially when you look at the last bull market that we were in for Circle, and it was fucking up only, right? I mean, look at this from the beginning, roughly in January or December 2018, so like right at the end of the bear market back then, literally at the bottom around there. It shot up from a value of say 229 million roughly to, by the top of the bull market, $55 billion. So a lot of money flew into the stable coin. You can see that a lot of people were excited about it. This is probably I'm not saying it's the safest because I don't trust any stable coin right now. I want no exposure to crypto whatsoever. But this is the one that's probably the most regulated and has, reported how much, its backings. It actually does audits as compared to Tether. And we're seeing this one bleed out harder against the stable coin that doesn't, provide any audits, or they do claim that they do, and we don't see them for 3 to 6 years until, I don't know, we just never do, kind of, until we kind of forget about it. But I want to pull this up and see that, okay, now we're down about 73 million, so maybe some people bought in right here. Actually no, is that on the daily or is that monthly right now? No, we're down about 74 million right now on the daily. But if you pull up USDT on the market cap, you can see that we're up about 784 million. And this is what I wanted to show you guys. There's a massive gap here, right? And look at this massive candle that we shot all the way up to. We shot up to 90 billion today. I don't know if that's a glitch or not, or I don't question. I don't believe anything is coincidence in this market right now. But if we pull this up and see where it shot,
that looks like a glitch to me, but I don't know.
It's on the 1 minute chart. Look at that, 3 candles that shot up all the way to 90 billion. I'm hoping it's a glitch, but at the end of the day, the market cap is still up today. It's up $784 million, which means that they are minting or people are putting money into it. I think the issue with Tether, when I look at this though, and I think a lot of people underestimate it, is that a lot of this money isn't from people buying Tether through the minting it by sending cash to the treasury, and then they mint the stable coins for them. A lot of people buy Tether through the exchanges, right? They buy it through Coinbase, they buy it through Binance, they buy it through all these exchanges. So whatever. When a lot of people want to sell off or the price depegs, they're probably going to not sell through the treasury because they don't have an account. They're going to sell through the exchange. That's how we get depegs, because if the supply is too low compared to the demand and everyone's trying to sell off and they just don't have the reserves backing it, we could see a depeg from $1 to 95 cents, very similar to what we saw with USDC back in March, right? So it's something that we have to keep in mind. But seeing these gaps and seeing how much it just keeps pushing up, and we're seeing how the altcoin market just doing extremely well and Bitcoin's doing extremely well. This is kicking ass, while the most regulated stablecoin that a lot of people, a lot of institutions probably back and are supporting is doing terrible, that's red flags all across the board, right? So that's why, I mean, I keep beating this like a dead dog, but this is really important to
Red horse.
is it dead horse, dead dog? Kicking.
Don't beat.
Well, it's like
God,
kicking a dead
Kevin.
dog. That's the saying. Beating a dead
No,
horse.
that's not a saying. No
It
one
is a
says
saying.
that.
Yeah.
No, it's not.
It's when you. I guarantee you, it is.
No,
It's like when you say something. I'll put another. I'll bet you 100 USDT on the Tron blockchain. But yeah, regardless, I just bring this up because I do want people to be safe out there. And, it was a year ago that we got FTX, and I just want to put that in perspective that, all this is still connected. We have not escaped the FTX fallout cycle. I guarantee you that we have not. Eventually, something is going to happen. I don't know when. So maybe it's me being overly precautious here, but I think that there's just too many red flags around crypto right now. And for a lot of people being euphoric here, thinking that we're going into a bull market when we're seeing a lot of conflicting signs in TradFi and global economics, I think that this could be the biggest fraud in human history. So I'm just saying that out there right now. I think that's, what
it's
I think.
On the record.
That's all I'll say.
I know what you think. All right. That is how we're going to wrap it up for today. We'll be back tomorrow a little bit earlier, starting half hour earlier, because we have Kevin's, he's got to go to the old fiat mine as well. So we'll see you all tomorrow. Appreciate you being here. If you have not yet, hit that like button down below, subscribe to our channel, drop a comment, share us out on social media. All that good stuff is appreciated. Stay safe in the markets. Have a great rest of your day, and we will see you next time.
Take care, everyone.